Hello guys, once again, good day to all of you. Our topic for today is another continuation pattern, and it is called rectangular pattern. Rectangular formation pattern goes by several other names. Sometimes it is called box pattern, horizontal pattern of support and resistance, or even sideways. It is just consolidations period in the trend, whether it is up or down trend, and it is usually ends with a continuation of the original trend direction. This is the classic illustration of rectangular formation pattern. When this pattern is developed, it will last sometimes in a week or more. In other cases, it takes a month before it breakouts. There are rectangular formation patterns that can be tradable and not tradable. I will discuss later the difference of two. Before we continue, please don't forget to press like, share, and subscribe my YouTube channel, and also please press the bell to notify you to my next video. The formation creates a horizontal trend line at the top and a horizontal trend line at the bottom. In the beginning of the formation of the pattern, it is looked like double top and bottom or triple top and bottom. The only differences is the volume. But as the trading days goes by, it has a series of tops that touching the upper trend line and a series of lows touching the lower trend line. And the price is moving sideways before it breaks out. The price is touching at the upper trend line, which is called resistance, causing the price to bounce down, restricting to penetrate the upper horizontal trend line. And at the bottom, the price is touching on the support and bounce up, restricting to penetrate the lower horizontal trend line. In this setup, the rectangular pattern formation is oscillating between the lower and the upper horizontal trend line, which is the support and resistance. And it is hard to predict when the price will break out, except that the shrinking volume is the hint that the breakout is coming. Because it is normally associated in the continuation pattern, you should keep an eye on the volume of trading for some assurance. The weak trend moves should have heavier volume than those that go against the trend, meaning every time the price moves going up the same with its original uptrend direction before it goes sideways, the volume is more compared when the price moves going down or against the original trend direction. This is the actual trading chart that's showing that the pattern moves more than a month before it breaks out. It has a lot of tops and bottoms. First, you will notice every time the price moving in the upper trend line, the volume is more compared when the price is moving towards the lower trend line. Second, the volume is shrinking before it breakout happen. Third, during the breakout, a heavy volume you will notice, and the price continue its original uptrend direction with increase of volume, and then the pattern is complete. Next, we will talk about how to trade. In this type of movement as shown in the chart, we can say that this is tradable because of the range between the lower and the upper trend line. You can buy at a support and sell at a resistance, but you must be sure it is valid or legit support and resistance line or upper and lower trend line before you trade. To know it is a legit trend line, it must be touches 2 or 3 points before you draw a line. This kind of pattern is not tradable due to the range between the lower and the upper trend line, and you will not get a good profit. The best thing to do is to wait for the time the price will break out. That's all for today. I hope guys you've learned a lot on the presentation. Thank you. Bye. Thank you for watching. Till my next video. Bye!